Hello everybody, welcome to my YouTube channel, and in this video I'm going to share with you the detailed analysis of this company called the Trade Desk with ticket symbol TTD. This is my 4 steps analysis approach. First step is to understand the company by studying its business, what is the business overview, and studying the company's market capitalization. Next is to study the fundamentals of the company. What is its earning capability? What kind of assets is it holding? What is the management efficiency? And what is the company's profitability? The third step is to study the leverage. Is the company overborrowing? Does it has the ability to repay its debt? And my last step is to backtest to gain the conviction on buy-sell strategy. The Trade Desk Incorporate, TTD in short, offers a technology platform for advertising buyers. The company was founded in November 2009 and is headquartered in Ventura in California. TTD offers 3 key services to its customers. First is the demand-side platform, where it provides the expertise to help its customer plan, execute, and measure the effectiveness of digital advertising campaign. The second service is the data management platform. TTD offers its customer the ability to harness data to target advertisements to help customers grow their businesses. And the last service is called the Trade Desk API. API stands for Application Programming Interface, which is a way to customize the advertising strategy. In the next few slides, I'm going to go into more details of each of these key services that TTD offers. First, for demand-side platform, it is divided into 4 key areas in fact. So now imagine if you are a company looking to advertise to market your products and services. You can make use of the planner to find out what is the smartest way to spend your budget before investing even a single dollar. By just providing the parameters, advertising parameters such as your budget, what are your advertising goals, where the geographical locations you would like to advertise, and the planner helps you do the rest. Cross-device targeting is to help TTD's customer to deliver the advertisements to the right audience on the right devices and the right number of times. TTD has a proprietary artificial intelligence software where it enables real-time optimization to boost performance and ensure customers are reaching the right audience and submitting the right optimal bid for the advertising time slot. And through using the planner cross-device targeting and using the AI, TTD can provide a feedback using its measurement suite to prove that the campaigns are driving real business results by linking the advertising campaign performance to the online and offline matrices that matter most for your brand. TTD has more than 225 partners through which advertising can take place. And the advertising can be on different platforms such as connected TV, mobile, video, audio, physical display, and social media. Over here in these slides, you can see some of the partners that TTD is working with. You have Disney Channel, ESPN, Fox, Spotify, BBC, so on and so forth. Now let's move on to the next service, the data management platform. Firstly, the data marketplace allows the access to the best identity and data providers to build the most relevant audiences possible. And TTD's customer can use its proprietary search tools to search for high quality data that will be useful for their advertising campaign. But at the same time, TTD also help its customer to create audience and to help them reach beyond the core customers by using data to discover new high-value audiences. In order to provide good data, the company buys data. So over here in this slide, you can see TTD's partners to gather data that is needed for customers' advertising campaign. In order to ensure high quality data is provided, all the data are vetted for relevance to avoid targeting stale segments or segments that aren't useful for driving conversions. And the data are built for precision. There is a segment scoring to ensure that the segments TTD's customers are reaching align with their target audience. And lastly, the data are rated for consistency, where reliability scorings verifies that TTD's data providers, are correctly categorizing segment identities. So much for the data management platform. Let's move on to the Trade Desk API. API or Application Programming Interface is actually a software intermediary that allows two applications to talk to each other. The customers of TTD can customize their advertising solution with support from their global team of engineers, data scientists, and programmatic experts, while at the same time can tap into the newest advertising technology, build proprietary advertising solutions, create a competitive advantage to maximize operational efficiency. And because the customers, they are using the API themselves, the customers maintain ownership of their own data. This graph shows the market capitalization of TTD. Currently, the company's market cap is around $30 billion. And over the past 5 years, the market cap grew from around 1 billion here to 30 billion today, a growth of 30 times, which is a clear indication that TTD is a growing company. So now I would like to, at this point, take a shot to show you where you can get the market capitalization chart for free. You can go to this website called Macro Trends here. Come to this page, and then you can search for the company of interest. For example, we are interested to look at what is the market cap of this company, TTD. And then over here, it gives you a selection whether you want to display 3 months of data, 6 months, 1 year, 3 years, or all the data. And this is where I get the chart from. This is a free software that you can consider using to plot the market capitalization of the company of your interest. Now coming back to the presentation. So much for understanding the company. I hope you have a better view of what TTD is about, the 3 key service areas that it provides. And we move on to the next chapter on the fundamentals of this company. Over here in this chart, this is chart representing the top line of the company. The blue bars represents the revenue over the years from 2015 to 2020, and you can see there is a clear uptrend for the revenue, a very consistent uptrend. The orange line shows the revenue percentage growth. There are a few things that we can get out of this line. First is that we see a very healthy percentage year-on-year revenue growth. Currently, it is about 26.5% from 2019 to 2020. It's a very healthy at least double-digit percentage growth. Important indicator that I'm looking out for because I'm looking to invest in a growth company. The second thing we can see from this line is downward trending. Now, one of the possible reason for this downward trend is this. At the beginning years, at let's say 2015, the revenue is around 100 million US dollar. And it is comparatively easier to jump from say 100 million US dollar to 200 million US dollar revenue versus if at 2020 the revenue is around 800 million. If you want to jump double, you have to jump from 800 to 1.6 billion US dollar. So from this perspective, I think it is still acceptable that there is a downward trend due to the revenue increasing. But we must continually watch whether the downward trend continues. If the revenue percentage growth can maintain in a double digit, it means at least more than 10%, I would think that would indicate it is a good company to invest. But if the revenue percentage growth continue to drop below, let's say 10% to single percentage, then that is an alarm that we need to pay attention to. So much for the top line. Let's look at the bottom line. EPS stands for earnings per share. The top line revenue, if we take the revenue and we subtract all the expenses, we get the net earnings. And if we take net earnings divided by the total number of shares, we get earnings per share or EPS in short. Here it's very clear that the EPS is growing consistently, a very good uptrend, and a very good at least double-digit EPS percentage growth. So I have no issues at all with the EPS performance of TTD. How about operating cash flow then? Operating cash flow refers to the cash that TTD brings back to its company by operating through its core business. You can see a few things in this graph. Firstly, the operating cash flow are all positive. Secondly, the general trend is uptrend. There's a huge jump from 2019 of our operating cash flow to 2020, a 498% jump. But what we can see here is the percentage, the operating cash flow OCF percentage growth is not consistent. From 2016 to 2017, there was a decrease of 58%. And then 2017 to 2018, there's a huge jump of 177%. And then dip slightly from 2018 to 2019 by 18.3%, and then another huge jump. So this is something that I personally don't prefer, but I don't see big issue here. Personally, I would prefer the operating cash flow to be consistently uptrend and with a good double-digit operating cash flow percentage growth. So this is a portion where we need to continue to monitor. The net asset value. If you take the total asset minus total liabilities, we get the net asset of the company. If we take the net asset of the company divided by the total number of shares, we get net asset value per share or NAV, which is what you see here in this graph. It's very clear in this graph, the blue chart's consistent uptrend and the NAV percentage growth is also on an uptrend and a very healthy double-digit growth. How about the management efficiency? I use two parameters. First is the ROE, which stands for return on equity. Return on equity in essence refers to how well the company can bring in earnings with its equity, with the amount of equity that it has. And in general, a higher percentage indicates a more efficient company, and a low percentage indicates a less efficient company. Personally, I'm looking at least 15% for ROE, and we can see consistently for the past 4 years, TTD maintained an ROE of all above 15%. Next is the quality of earnings. Quality of earnings refers to how well the earnings are converted to cash. Quality of earning QE more than 1 means that the operating cash flow is more than the net earnings, and vice versa. If the quality of earnings is less than 1 means that the operating cash flow is less than the net earnings. Personally, I would prefer to see a QE consistently above 1, and unfortunately what we see here is, let's say in 2017, the quality of earnings is only 0.6, went up to 0.9 in year 2018 and went down to 0.6, and now at 2020 is at a very good ratio of 1.7. This is also another watch point for TTD to ensure that the company is efficient in converting net earnings to cash, because the cash is the bloodline of a company, and without cash the company will quickly go into bankruptcy, and therefore we want to ensure that the company is able to bring in a healthy level of cash flow. To analyze the profitability of the company, I use this ratio called net profit margin. Net profit margin is the percentage of net earnings over total revenue. And in general, in layman's term, the higher the percentage, the more profitable is the company. And personally, I would prefer to see a consistent uptrend for net profit margin, and also a consistent net profit margin percentage growth. Over here for TTD, you can see the general trend for net profit margin is up, but there is an inconsistent net profit margin percentage growth. From 2017 to 2018, there was an increase of 12.1% and a dip of 11.3% from 2018 to 2019, and then it jumped from 2019 to 2020 by 76.9%. This is also another watch point because of the not so consistent net profit margin growth that we need to keep a lookout for when we are investing in this company. This is a quick summary of the fundamental analysis for TTD. A full score will be 5, and for the revenue and revenue percentage growth, I give a full score because we can see that the revenue is increasing consistently with a very healthy double-digit percentage growth. And the same applies for the earnings and earnings percentage growth. For the operating cash flow, on the other hand, we see a general uptrend for operating cash flow. It is bringing in positive cash flow, but the operating cash flow percentage growth is not what I would prefer it to be. There was 1 year, if you can remember, that the operating cash flow percentage became negative, so there was a drop in operating cash flow. And therefore, I give it a score of 3 out of 5. For net asset value and net asset value percentage growth, we can see that they are both growing. The trend is very healthy uptrend, and the percentage growth is double digit. So I give it a full score, and the same applies for ROE. Is consistently above 15%. For quality of earning, I give it a score of 4 because in 2020 the QE is very high, 1.7. But if you look back a few years before 2020, the quality of earnings, they are ranging from 0.6 to 0.9. Personally, I think it is not too bad. and I'm quite happy that in 2020 the quality of earning went above 1, and therefore I am giving it a score of 4. Lastly, for net profit margin and net profit margin percentage growth, is generally on an uptrend, but the percentage growth is not what I would like it to be. There was a year where the net profit margin percentage growth was negative, and therefore I'm giving it a score of 3. So let's move on to the next step of the analysis, which is the leverage. TTD's debt to equity ratio currently stands at 28.9% for FY 2020. Personally, I'm looking at a debt to equity ratio of less than 100% as a good indication that the company is not over borrowing. A debt to equity of 100% means that the debt is as large as the equity. Or if I put it in another way, there is enough equity to cover the company's debt. If a debt to equity is more than 100, indicates that the debt is larger than the equity. There is insufficient equity to repay its debt. So that is a ratio that that's an indication that the company might be over borrowing. For TTD, in this case, the debt is only standing at 28.9% when compared to its equity. It has no problem using its equity to pay off its debt, and therefore I would say that the company is not overly leveraged. And if I delve in further, as of Q4 2020, TTD has 0.62 billion of cash and cash equivalent and a total debt of 0.29 billion. This implies that the company is in net cash position because at any one time currently it has more cash and cash equivalent to be able to pay off its total debt. What it means is that there is a very low risk that this company would default on its obligations, simply because it has enough cash to pay off all its debt. This is the graph. Total debt is 0.29 for Q4 2020 and cash and cash equivalent is 0.62. So now I would like to quickly show you where you can get this information for free. You can go to Google and now you can say type TTD Morningstar. Normally it comes out as the first link. You click it, it will lead you to Morningstar. Morningstar provides both free and paid data. I personally feel that there is no need to go for the paid version because the free one has already the information that I need. So over here, go to financial here, this button here, this tab, you go into financial. It will display the income statement, balance sheet and cash flow statement of TTD for the last few years. And over here, balance sheet, you can see this is where I get the data of how much total debt the company is having and how much cash and cash equivalent it has. And over here is a very easy comparison whether the company is or is not in net cash position. Alright, so coming back, leverage, I think TTD has no issue. It is not over borrowing, and in fact it is in a very healthy position because the company is in net cash position right now. Last step will be on backtesting. This is the weekly chart of TTD, and over here I plotted the MA50 weekly line, which I call it the value line. Now let me again show you where you can get this graph for free. You can go to tradingview.com here. Tradingview.com is again similar to Morningstar. There's a free version and the paid version. Personally, I think that the free version is already quite powerful and good enough for my use, and therefore I'm showing you here the free version. The drawback is that you probably see a bit more advertisements, but to me that is acceptable. So now if you go to, you can choose the ticker symbol. Let's say you can search, click the plus sign here, add the symbol TTD, and then you can add, this is the plus sign to add. I've already added TTD to my watch list, which is here, and now it's displayed. How do we switch toggle for different time frame? Is this button here. Go to here, you can display whether it's in minute up to, let's say, hours to days, and I am using the weekly chart. And how do we plot the MA50 line here? Click this button, indicators and strategies, choose moving average. Moving average here, and then it appears here. Now to change the time frame for the moving average, now you see it's a MA9, indicating is plotting a moving average of 9 weeks. We want to plot MA50, click the gear button here, select inputs, choose 50, and if you prefer, you don't want to see a blue line, you prefer, let's say, a red line, you can choose a red line, and then you see here the red line is plotted. If you don't want to display the moving average line, you can click this I button and it will hide it. I want to see the MA50, and this is what I call the value line. The first thing that we want to check for back testing is that this company, the value line is uptrend. What we want to avoid is to have to buy into a company where the value line is going flat or is going down, because it indicates that the overall price trend of this company is not to our favor, assuming we are buying long on this stock. Coming back to this, so I've done a screen capture for TTD. This is the value line, and you can see it's a very nice uptrend here. Now assuming we buy in year 2018, at the first candle that totally clear off the MA50 line here, is a price of around 86 US dollar. This is 80 US dollar, so this candle ends the week at around 86, and assuming an initial capital of 15,000 US dollar, the total number of shares that I can buy will be taking 15,000 divided by US 86 dollars, which equals to approximately 174 shares. For ease of calculation, I ignore the fees paid for the brokerage, but the concept is generally the same, with or without the fees included. And currently the price is at 751 US dollar. If I work out the profit, the current profit will be taking 751 US dollar minus 86 US dollar, my initial investment, multiplied by the total number of shares that I'm holding, 174, and the profit is 115,710 US dollars. If I convert this into percentage, I take 115,710 divided by my initial capital of 15,000 minus 1 times 100%, it gives me 671% growth of percentage of profit. which I think is pretty good. Now, what are the key considerations and assumptions then to having a higher chance of being profitable in the stock market? First and foremost is that the business you are invested in is a good business. How do we determine whether it's a good business? If you follow through the beginning of the video, we first understand what the business does. What are its goods and services that it provides to its customers? Whether it makes sense, whether there is potential growth. We analyze the market capitalizations of the company to see whether it is indeed a growing company. We look at its fundamentals, for example, the revenue, the earnings, net profit margin, return on equity, so on and so forth. And we study the leverage to make sure that the company is not overborrowing. Maybe in some of these analyses there are some watch points. So these are the areas that we continue to watch and stay abreast with the company's development. The second consideration is that the value line, which is the MA50 weekly line, should show a consistent uptrend. Like here, it's a consistent uptrend. Even during the COVID pandemic period where the stock market plunged in March 2020, you can see that the MA50 line did not turn downwards and continue its way down. After a while, it comes back up and it maintains its uptrend. So this is a good sign. If there is a major shift in the uptrend to downtrend, we must be extra careful. Because remember, we make money from the trend. If the trend goes against us, it is a clear sign that the investment may quickly turn unprofitable. So continue to monitor the trend is important, and I've also shared with you a free software where you can easily use for free to plot out and see for yourself what is the trend, what's the price trend that you are watching for the company of your interest. In summary, choose a good business with excellent historical price trend. Backtest to build up your conviction and follow through. Follow through is very important. If you follow through the strategy and you have enough conviction because you have done backtesting like how I had done it for TTD, the results can be tremendous. In this case, the profit percentage was 671%. And lastly, I hope this video is useful for you. If you like this video, I would deeply appreciate that you could smash the like button, share it with your friends, and subscribe to my channel. These little actions mean a lot to me, and they will encourage me to do better and produce higher quality videos in future. Thank you so much and hope to see you at the next video. Goodbye.